Good afternoon. George Cavaligos for HFT Bonds. I mean, come on, guys. Let's give it a rest for a day or two. I mean, point ranges, horrible weak economic data, bonds rally a point and some change, stocks sell off hard, and here we are, the trade in the day of QE. I think, like, at some point, if it goes down enough, any market, you just have to say, well, the Fed's printing so much money that it's at some point going to put a bid under everything and anything, and you just got to figure out when you get to that point and you step up and try to buy it. Hopefully you can use technical analysis to do it of some type. You know, I pointed out the commitment of traders situation with the treasuries. We've seen some fairly substantial increases. Now remember, this data is as of last Tuesday. Comes out Friday for the previous Tuesday. We've seen some substantial increases in the dealer net long position in treasuries. And it's to the point where it's almost like you want to grab an offer, except you can't. Not in this day and age. You can't just grab an offer because the market's not trending in a bullish fashion. If anything, it's trending in somewhat of a bearish fashion, even though I still maintain that we're in some kind of a big trading range. And we'll remain in that big trading range with various parameters over the next year until the Fed stops QE of one way or another, whether they're forced to stop or whether they choose to stop. And then the markets might be able to get back into a more normal, human emotion-driven type of event. At this point, it's not. So, you know, everything goes down hard, but everybody kind of goes, oh, wait, there's all this money. What are we going to do with it? Let's buy something that's down, that's really cheap. I could just see these guys sitting at the big banks or at the central banks or at the primary dealers that have all this capital sloshing around, and they just keep printing the, you know, the new funny money that people still accept until they don't. Remember that. You know, people might want to be more inclined to be prepared. Remember the old Boy Scout motto, be prepared. All right, back to the bonds and notes, enough pontificating. The idea being that with dealers increasing their long positions in the bonds and notes, at some point they will be buying too. And I think we saw the market get down to a level this morning. Jimmy, I'll call you back. Get down to a level this morning where the dealers stepped up and bought it. So far this afternoon, we haven't seen anybody step up. You know, we've come back, you know, close to half a point in the bonds off the highs, almost half a point in the notes too. And we're not seeing, you know, the good buyers here. I'm thinking we could get maybe a little bit weaker overnight into, you know, either the Asian session. We haven't seen much real weakness, but sometime tonight we get a dip back down towards, you know, the previous settlement kind of level. I'm looking to buy them at some point. Haven't seen any buyers show up. We've been marking time, you know, all afternoon here, and I think I'll be patient. A lot of data out again tonight and tomorrow. See what the yen's doing. Obviously a pretty bullish close for the yen today. Closed near the highs, never pulled back really, and you know, it looks like, you know, you're just doing a bull flag up near the highs. The yen rallied and then just straight sideways. So I think you get another extension higher, but you know, all these things are manipulating. One guy's comment can change that, but the general idea is I want to buy a dip in the treasuries. On the upside, I'm watching the rollover gap in the 10-year. Goes from 129.30 to 130.05 plus. There is a big tendency for the market to fill those rollover gaps, even though we did not fill the previous one, I don't think. Don't quote me on that one, okay? Alright, that's about it. Kind of simple, you know, short and sweet. Have a great night. I'll see you tomorrow.